While the US was deep in its own trade battles, Canada made a power move in Europe. Trudeau met with NATO and EU leaders not to talk military, but to push something else: buy Canadian. It's a direct challenge to US suppliers in European markets. If Canada convinces NATO allies to shift supply chains, it reshapes economic influence across the Atlantic. Washington wasn't expecting this, and now the question is Canada quietly setting itself up as a trade alternative to the US? Canada didn't just show up to talk policy. It came to make deals. The pitch: stop relying so much on US suppliers. Choose Canada instead. Trudeau highlighted Canada's manufacturing, energy, and aerospace sectors, positioning them as reliable alternatives for European markets. At the center of this is CETA, the Comprehensive Economic and Trade Agreement between Canada and the EU. If European businesses shift just a portion of their supply chains away from US companies, Canada gains and US economic influence weakens. It's a simple strategy, but one with massive implications. The US has long been the go-to economic partner for NATO allies, but Canada's latest push puts that position at risk. By offering competitive prices, fewer trade restrictions, and direct supplier agreements, Canada is making it easier for European businesses to diversify away from US imports. If Europe begins shifting toward Canada for energy, technology, and industrial goods, it cuts into US exports, and with it, Washington's leverage in global trade. The real question is how much of a shift it would take before the balance of economic power in NATO starts to change. Was this move on the radar for US leaders, or was Washington blindsided? Trade analysts are already debating whether the US underestimated Canada's ability to position itself as a transatlantic alternative. Right now, Washington faces a choice. Does it push back economically, introduce new incentives for European businesses to stay within US supply chains, or does it let Canada's influence grow, knowing that any major reaction could escalate into a trade battle? Either way, Canada's move forces the US to rethink its economic strategy with NATO allies. This isn't just about one trade visit. It's part of a bigger pattern. Canada is actively expanding its trade relationships beyond the US, securing stronger ties with Europe, Latin America, and even Asia. What's changing? Stronger trade negotiations with Europe mean Canada isn't fully reliant on US deals. New energy exports position Canada as an alternative supplier in global markets. A push for trade diversification signals that Canada wants a larger role on the world stage. If this continues, Canada could soon become more than just a US trade partner. It could be a standalone force in international trade. Canada and the US have always had one of the closest economic partnerships in the world. But moments like this raise the question: is Canada pivoting away from that relationship, or just playing its cards smarter? Here's what we know. 75% of Canada's exports still go to the US. The economic ties run deep. US tariffs and trade disputes have pushed Canada to explore alternative markets. Canada isn't breaking from Washington, but it is making sure it has leverage. This isn't about replacing the US. It's about making sure Canada isn't overly dependent on any one trading partner. If the US keeps applying trade pressure, Canada's new alliances could turn into permanent trade shifts. That's when things start to get serious. Canada's move wouldn't matter if Europe wasn't interested, but the response so far has been surprisingly open. Why? Supply chain diversification. Europe has been looking to reduce its dependency on US imports, especially with trade tensions rising. Energy security. Canada's natural gas and oil exports offer an alternative to US suppliers. A key factor as Europe looks to stabilize its energy markets. Political strategy. Strengthening ties with Canada creates leverage in future trade negotiations with both Washington and Beijing. European leaders aren't rushing into anything yet, but Canada's pitch aligns with their long-term goals. Economic strategy. If Canada can lock in these deals, it secures a stronger foothold in European markets, and the US loses influence in a region it has long dominated. This isn't just a political move. It's about real money, real trade, and real economic shifts. Let's talk hard numbers. Canada-EU trade already sits at $119 billion annually thanks to CETA. Canada is one of the EU's top 10 trading partners, but with US dominance in many sectors, a shift of even 5 to 10% of transatlantic's imports away from the US to Canada would mean billions in economic impact. If Canada increases its share of European trade while the US faces tariff disputes, it's not just a symbolic win. It's a major economic shift in transatlantic power. Washington knows this. The question is, how will it respond? For now, this is just an economic move, but it has NATO-wide implications. If Canada succeeds in strengthening its trade position in Europe, other NATO members might follow. Germany and France may increase trade deals with Canada, reducing reliance on US imports. Smaller NATO economies might look for better trade terms outside of Washington's shadow. The US could find itself negotiating harder to maintain its share of transatlantic trade. This isn't a NATO crisis, but it is a potential shift in how NATO economies trade with each other. And if Washington sees this as a threat to its economic leadership, we could see a counter-move soon. So what's next? Right now, Canada is testing the waters. But if European countries start favouring Canadian suppliers, this could lead to a major realignment in transatlantic trade. Stronger Canada-Europe supply chains that weaken US dominance. A push from Washington to counterbalance Canada's influence. We're at a turning point in trade alliances. This could be a short-term strategy, or it could be the beginning of Canada carving out its own trade empire. The US isn't ignoring Canada's trade push in Europe. The question is, how will Washington react? There are two possible paths. Counter Canada's influence by offering better trade incentives to European allies, or apply economic pressure on Canada to keep transatlantic supply chains US-centric. Both come with risks. If the US pushes too hard, it could drive more European companies toward Canada. If it doesn't act at all, Canada could cement its position as a growing trade rival. Right now, Washington is watching closely, but if Canada gains serious ground, expect a counter-move. Trade is rarely just business. It's about alliances, influence, and long-term power. If Canada secures stronger trade ties with Europe, it could open the door for closer ties with European economies that shift away from US suppliers. Stronger Canada-EU trade pacts that set new global standards. A domino effect where other NATO economies look for alternatives. For now, these are early moves, but if Canada plays this right, it could create a new economic power network that reshapes global trade. Is this a one-time trade push, or is Canada laying the groundwork for a bigger shift? Here's what we know. Canada is not cutting off the US, but it is looking for economic independence. If these new deals stick, Canada gains more leverage in future US trade negotiations. If Washington retaliates, it could turn into a long-term trade realignment. Right now, this is a test, but if it works, expect bigger moves soon. Canada's latest move isn't just about trade. It's about who controls the supply chains that fuel the global economy. If Canada locks in its position as a stronger trade partner, in Europe, We could see a new transatlantic trade balance with Canada, playing a bigger role, shifting US influence as European markets diversify. A long-term shift that makes Canada less dependent on Washington's economic policies. For now, this is a bold step, but what happens next depends on how the US reacts. Now here's the real question. Is Canada positioning itself as an independent trade power, or is this just